Hello there, my name is Miles Pitcher. I'm your all-in-one mortgage expert. I'm the owner of Superior Lending. Today I wanted to take a quick look with you at the all-in-one loan versus the 15-year mortgage. We've done the 30-year already. If you haven't seen that video, check it out. But let's see how the 15-year and the all-in-one stack up against each other and which one may be more advantageous for you. Hello, this is Miles Pitcher. So by now you've probably seen some of my videos that show the all-in-one versus a 30-year mortgage. Lots of ways that can be advantageous over a 30-year mortgage, cutting off years, saving in interest paid, and providing flexibility. I wanted to show you what it looks like on a 15-year mortgage today, or a comparison of the 15-year versus the all-in-one. So let's throw in some numbers and take a look and dive into this. So we're going to start a new simulation. We're going to compare against a new loan in a primary residence, $600,000 purchase price. We'll put in a loan amount of $400,000. Loan type, we'll choose 15-year. Interest rate, 2.125. So principal and interest payment, $25.96 on that 15-year mortgage. We'll go to the next page. Now this is our deposits page. We will assume that our client or you are making $4,000 net every other week, bi-weekly. And we're, again, on these deposits, we're not putting in our gross number, we're putting in what the net is, what hits your bank account every single week, bi-weekly or monthly. What's left over? We will not itemize this time. You could if you wanted to itemize it, but we will go with a percentage left over, and we're going to put in 25% left over. So that means that after the household expenses are paid, we have $21.66 left over after our household expenses every month. So let's hop into our results. So a few interesting things here. Number one, the all-in-one would be paid off in 8.5 years. But since the all-in-one is carrying a higher interest rate than the 15-year mortgage, you can see that the total saved is zero. You would pay more on the all-in-one in interest because of the higher interest rate. But keep in mind and remember that the default for our simulator has the interest rate at a higher rate, 5.89. If we move this to the average, if we move this to the stable current rates, 3.84, let's check it out. So now we've cut off some time, 8.1 years, and we saved $3,200 in interest. That's not a huge savings. In fact, that wouldn't even cover the closing costs on doing this purchase savings wise. I mean, you would be paying the closing costs one way or another on the purchase. Let's jump back and just say, what would happen if our percentage left over was higher, say 30% left over? What does that do? Not a whole lot. In fact, I don't know if that even stuck. So yeah, we have a little bit more left over, 2,600. What about 35%? So that cut off some time and saved even more interest. Let's go back to 30. 7.3 years saves a lot more in interest. Now, the big thing here on this one is to understand that while this may not save you a ton in interest, what it does give to you is that accessibility to or access to that credit line for the life of the loan. You can access that $400,000 and draw it out if you need to. So the 15-year is a great way. It's an awesome loan. I love 15-year mortgages for a lot of my clients. But if your goal is to access the equity in your home for maybe buying an investment property, paying off other debts, having it available for emergency fund use, retirements, weddings, whatever be it, the all-in-one may be another option or a great way to look at that. Let's go to this pay down summary. So our numbers right here show that our break-even rate is 4.3%. That's a lot lower than it was on our 30-year mortgage. Our 30-year was higher, up around 7% or even higher. But again, I shared with you some other points to consider on there, but this is still pretty cool to see that how quick you would pay this down to zero on the all-in-one, while you still have quite a few years left on the 15-year mortgage. So I hope that helps looking at this 15-year mortgage versus the all-in-one. Let me know if you have any questions. Again, you can always hop to our simulator, plug in your numbers, try it out, see if it's a fit for you. Hope you have a great day. Miles Pitcher, Superior Lending.